Hello and welcome to today's edition of Charting the Markets. You're with me, Sean Murison, Senior Market Analyst at IG South Africa. Today's economic calendar is relatively light, but we do have that preliminary GDP data out of the US. That's early this afternoon. And that is preliminary data. It's a reprint of the advanced GDP data where quarter-on-quarter growth came in at 2.9%. And the revision, the preliminary data is expected to come in line with that at 2.9% growth as well. Looking at some charts and starting off with the S&P 500, we do still have this tentative uptrend that hasn't been in place. We had a break of this trend line, so the short-term acceleration thereof has broken down. Market appears to have found some support here at our dotted trend line that we've drawn in on our chart here. And then we've seen this doji, which is a point of indecision. And then we have a really small-bodied candle right now. So our bias right now still stays to the upside on the S&P 500. We have found support and we are in oversold territory. Ideally, though, we want to wait for today's session to produce a strong close, preferably above the halfway mark of this big red candle we see on our chart. In that situation, we start targeting our levels higher, 4,050, and ultimately maybe even 4,195. We're going to watch levels in between there, 4,100, 4,140 on the way up. And that's only if we do get a strong close. If we do see the market selling off and breaking below trendline support, we'd rather sit on our hands, wait for weakness to play out, and look to our next level of support, which is a little way away, about 3,880. And in that situation, we'll see how the market handles the move towards that level. If we can see it end with a bullish reversal, then we'd look for a long entry somewhere around about there as well. So we are still keeping to a long bias right now. The conviction has been diminished a little bit over the short to medium term, but ideally strong close on today's candle before initiating longs to see a bit of a rebound from oversold territory and an extension of that sort of longer term uptrend that is in place. Now moving over to Europe and looking at the DAX 40, this uptrend is more pronounced at this point in time. We are seeing a correction at this point in time, which is more sideways rather than the market pulling back. That to me is a slightly bullish signal because there's a reluctance to really sell off. And that's despite the gains that we have seen. In previous weeks, we talked about this pennant or small triangle formation. We had a nice breakout. We've had a bit of a pullback, and that pullback has actually turned into that consolidation we're talking about right now. So we're watching this level here at 15,270. That is support. We do have this little hammer type formation here at that support as well. We'd like to see a strong close, and we can target that 15,115 level, which we've been talking about in previous weeks, and through there, if we can get a close above there, then 16,300. If the market doesn't hold the support level, we wouldn't be looking at shorting just yet because we still think that longer term uptrend is in place. We do have a positive lie of these moving average, 20, 50, and 200, red, green, and blue on our chart. And so if we do break that, we look towards our next level of support here at about 14,605. And hopefully we can get a bullish reversal closer to there for long entry. But certainly it's not yet looking for any types of short positions on these indices. FTSE 100 also now pulling back from new high territory at this point in time. Not quite in oversold territory. But it is finding support at the confluence of support between our horizontal line and our longer term channel support line at 7,870 odd. Now again, same situation. We'd look like to see a nice close above the halfway mark of this big red candle before looking for long entry. If we do manage to get that and we start targeting and moves back towards this initial high at about 8040, and through that, then we start looking at channel resistance for a longer term target. If we break below the support level, we sit on our hands, we wait for weakness to play out, and we look at this next level of support as a possible downside target about 7,710 odd. And we'd like to see a bullish price reversal before that level, before we'd consider long entry as well. Only if we start breaking below that, then we say, well, maybe this longer term trend is breaking down, and then we'd reassess our trend bias and our trades, direction of trades on the FTSE 100. Moving over to Asia now, looking at the Hang Seng. We are still now correcting from that recent high, and we are laboring in oversold territory at this point in time. When we look at this move lower, it does take a bit of a wedge type shape, and it does look a bit cumbersome, slow grind down relative to what was a relative strong and effortless move up. So our suggestion is the momentum is still to the upside. We are still trading above that 200-day simple moving average, but we're in a short to medium term correction of that longer term uptrend in place. So we are reaching near, we are trading near support at this point in time. We'd like to see a rebound off the support level before looking at a long entry, and that's about 20,100. Alternatively, a strong close above this wedge resistance here could also give a long entry indication. Then we target initially about 21,700, and through that possibly this recent high 22,815. So where do we start to reassess our trend bias is that if this price does continue to correct, we'll start trading below this blue line on our chart, the 200-day simple moving average. Moving over to some currencies and starting off with the US dollar basket. Now in previous weeks, and we've been talking about this downtrend that has been in place. It correlates with what has been a rise in equity markets. We are still considering a downtrend in place until such time we start breaking above this high trend line resistance and this major high at about 105.30. Now, over the last week, what has happened is that we are watching this level here, 103.70. We've broken above that level. So there is still a continued rebound from what was oversold territory. We're heading towards trend line resistance and that key level here at 105.30. If we do see a sharp reversal at or just before any of these resistance levels, we would consider short entry on the US dollar, where we start to change our trend bias as a move above this major high, and then we consider long entries and long trades on the dollar basket. Now, ideally, if we do hit that situation where we'd break that major high, for us to trade it, we'd like to see the market rally a little bit and the first pullback from that high. But as it stands right now, so still a continued rebound from oversold territory, from what was oversold territory, and we are waiting for a bearish reversal before one of these resistance levels for short entry. We reassess our bias if we trade above that 105.30 mark. Euro dollar is the inverse of that, but it tells the same story in terms of we've seen some short-term dollar strength in what is currently considered a longer-term trend of dollar weakness. We are in a short-term correction at this point in time of that longer-term uptrend. That correction is still underway. It has moved that market into oversold territory. Our next level of support here is about 1.0480. We're looking for a bullish price reversal before that, before we would look for long entry onto euro dollar. We start breaking below 1.0480. We sit on our hands, see how far weakness takes us, and as long as we are above that 200-day simple moving average, we can still consider longs, but wanting a bullish price reversal to occur before finding entry into something like that. Cable, similar picture at this point in time. Longer term trend bias is slightly to the upside. Short to medium term, we have this whipsawing of moving average or price through the moving averages. That's a suggestion that we're in a short to medium consolidation with that slight skewed longer term bias to the upside. This move lower does take a bit of a wedge type shape as well. It's a bit more cumbersome. It's lost its momentum. We are looking for a bullish price reversal before that 200-day simple moving average, before that 1.185 support level, before we are looking for long entry once again. Alternatively, a move above this trend line resistance here from current levels could also consider long entry with 1.2440 as a short to medium term upside target from the move. Looking at commodities now, starting off with Brent crude. Our assumptions here is that that longer term trend bias is down on Brent crude, although the short to medium term trend for this currency pair is sideways. We've had our we had this bearish reversal just before resistance here, and we are trading quite close to our downside target there of $79.50 per barrel. At this level now, we're going to see if this level holds. If it does hold, then we'd consider a rebound from oversold territory. Again, we would not be looking at getting long on that. We are only considering long positions on Brent crude if we've managed to break above this major high at about 88.70. In that situation, we'd like to see a rally above and then first pull back from that move for long entry. But as it stands now, we are short to medium term range, and so we're looking for short entries if you're not short already. And those are any bullish bearish reversals closer to range resistance, or alternatively on a downside break of that 79.50 level If we get that, we'd be looking towards 77.60 and 75.40 as possible downside targets from the move. Gold has moved to our lower level of support. We are in a short to medium term correction of that longer term uptrend that is still considered in place, and we are trading in oversold territory right now. So ideally, to get long again on gold, we want to see a reversal off this support level. So we want to see this support level hold first. It's $1,820 per ounce support level. We want to see a strong close, and just to show some momentum to the upside, and that's above that 1,845 before targeting moves towards about 1,875 and possibly $1,905 per ounce. If the support doesn't hold, we're going to sit on our hands. We're going to wait for weakness to play out, and we'll look at 1,775 as a possible downside target from that. Last but not least, looking at copper. Copper is in a bit of an uptrend there. That correlates with the reopening of the Chinese economy. Obviously, China being a major consumer of copper at this point in time, or historically, very, very popular market, electric vehicles, electricity infrastructure, lots of demand side drivers for copper at this point in time. We're in an uptrend. We've had a pullback from the recent high. It's reached trendline support. We look to have reversed off of that. Pulling back a little bit right now, but we think that reversal is still in play and still relevant. Targeting a move towards at $9,400 as per metric ton. And if we get above that, close above that, 9,770. If you're not trading copper, you might want to look at trading copper-related shares, the likes of Glencore, Rio Tinto, BHP, Billiton, and companies like that. Right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Do watch out for that preliminary GDP data out of the US, and that's a little bit later, early afternoon.